I believe the MicroStrategy approach will continue to work so long as Bitcoin remains in a bull market. Like the idea that an asset that is a derivative of Bitcoin can't decline while Bitcoin rises, I think is wrong, because we saw the opposite, right? We saw Bitcoin's chugging along, just kind of slowly heading higher, and MSTR ripping. So the opposite has to be true. If MSTR can vastly outperform Bitcoin, it can also vastly underperform Bitcoin. And that's something you need to understand. That's the end game. We're used sort of as a settlement layer between banks, where banks hold it primarily as a reserve asset, as an alternative in addition to treasuries. That's massive. This Bitcoin market's very different, I think, than prior cycles. I know people will dispute me on that, but the price moves much more orderly and regularly, and there's sort of like this institutional bid. It doesn't sell off violently. I mean, after the ETFs launch, for example, we trended sideways for 5 months, 6 months? That wasn't like a traditional market move. I think that we're in a different era.
Mr. Joe Carlasare, thank you so much for joining me today, being a playable character and to see non-playable characters. And I thank you so much for being you and being here today with me.
Yeah, thanks for having me, Brandon. This is going to be fun.
Absolutely. We're just briefly talking. There's so many things going on. I would love to. You're always a glutton for punishment. You're always out there on Twitter or an X, taking it to the people, giving them the real talk, and and it's what makes you you, and it's why we love you. What's burning things on your mind right now that are really, you're really watching right now?
Yeah, I mean, the most interesting thing right now is, I think, the election, right? And rather the new incoming administration, getting a new president in there who is a mover and shaker, who is one who has openly said that, they're not really going to be bound by historical norms and traditions, right? For good, for better, for worse, doesn't really matter about, passing judgment on it. When you're going to get in a change maker in there that's going to be willing to push the envelope as opposed to, more of the status quo, that's interesting, right? It's particularly fascinating in financial markets, right? We're going to have a new Treasury Secretary. We're going to have a new, SEC Chair, Paul Atkins. We're going to have folks that are coming in, I think, with a different mindset, particularly towards Bitcoin and the crypto space. And the interesting sort of thing that I'm going to look at is like the official position of the U.S. government right now, as evidenced by its SEC, is that Coinbase, the custody provider for the majority of the Bitcoin spot ETFs, they're not a lawful entity, that they don't have proper registrations to be a broker dealer, a clearinghouse. I think we talked about this in the last podcast. That is active litigation right now. There is a major suit that everybody filed in the crypto law world, which is the SEC versus Ripple. The SEC just filed at the 11th hour of the administration. They filed their appeal of Judge Torres's decision there. So to me, you got this massive sort of institutional precedent that is set with respect to this space, and I believe firmly it's going to likely be torn up very quickly, and you're going to see a lot of guidance, a lot of new pronouncements, a lot of executive orders on important things. Obviously, the Bitcoin, the SBR is a huge issue, right? How that takes shape. And I'm really interested to see, the biggest question in my mind is the new president, is he going to sort of look at Bitcoin and crypto as one and the same, sort of as a monolith, which a lot of newbies that come in and that are open-minded about the digital asset space, that's the way they start out, right? They say, oh, well, what about Cardano and XRP and Bitcoin? Or is he going to say there's Bitcoin, and this is a strategic national interest. We need to really prioritize Bitcoin. And yes, we're not antagonistic towards this greater crypto space. We want innovation. We want companies here. So for my purposes, right, that's the biggest question. That is the most, I mean, there's been this reporting. I don't know if you saw, Brandon, this issue about how, David Bailey has said publicly he thinks it's fake news, but this thing about how there's going to be at least an interest in other assets besides Bitcoin for a strategic reserve. People are responding, commenting to this. I don't know if it's all rumor and conjecture.
House photos they're posting, stuff like that.
Yeah. There's also a quote I think that was published. I don't know if it's again rumor and innuendo. So I assume everything is until I see really credible sources, but. Assume for now that this quote is not real, but I will share it with you just for purposes of discussion. There's this quote about how, I guess, Trump privately said something to the Ripple executives about how you weren't with me when I needed you. How much money have you made from XRP going up? I don't know if, why you weren't there. You were backing and supporting Kamala Harris. That's really fascinating, right? Like this idea that's floating out there that, he's going to look at these assets differently. So that's to me the biggest issue, along with the other, major issues that are outside of our space that are going to impact the country. Huge change very rapidly is always something that can create volatility, both to the downside and to the upside, right? I do not at all, I'm very bullish here, just that's my market outlook, right?
Mm-hmm.
I do not at all view the fact that we're at this juncture is somehow being negative. Volatility, is something that could be very positive, and it could move Bitcoin very quickly into the mid, six figures, 150, 140. I don't think that it's off the table. I also wouldn't be surprised if you get a little bit of disappointment and you have to wait around here above 100K, making a base for a period of time. But I'm not bearish. I don't know. I don't understand. I posted recently in weeks. I don't understand, Brandon, the argument for some of the bears here. It really doesn't make a lot of sense to me. I think it's just more of the hangover that they've been bearish for a couple of years, and they're saying, okay, I'm going to finally be proven right just because we've got a little uptick of CPI or the 10-year or unemployment ticks up a little bit. I mean, it seems like grasping at straws.
Is it this people conflating the cyclical and secular nature of markets? Because it, like, long term, it's, I mean, you've been talking about this, so many of us have been talking about this for years, really. Like, you have to keep printing, right? Like, the assets keep going up in nominal value. You have to, it's a debt-based system, but then there's these cyclical little ups and downs like you just talked about. And I feel like so much of Twitter, this debate is like people conflating these two. And I feel like that's where you come in a lot of times when you're like, guys, take a freaking pause, like just, zoom out a little bit. And I think that's where a lot of people get it. They just get it, or a lot of market participants, especially in crypto, haven't been around very long, right? They're generally younger, maybe under 40 or 45, haven't seen many markets. So it seems like that makes it tough too. Like, it's just two ships passing the night, people talking past themselves.
Yeah. So I guess what I wanted to draw is that, when you have a complex and dynamic system, right, people look for easy heuristics and simple things to try and make it, try to simplify their decision-making process, right? So for example, they want to look at the chart, which I hate, which is like when interest rates are being cut, that's when you want to sell equities because, the markets have collapsed when interest rates have been cut. The reality is when the interest rates are being cut, that's generally in response to something pretty dire in the economy, something slowing down, something, unemployment skyrocketing, a contagion in the banking system, something like that. Right now, that's not the reason the interest rates are being cut. Interest rates are being cut right now because the inflationary pressures, and not overall price level, I don't mean prices are going to crash, but the rate of change of inflation is declining, right? So we had 8%, 7%, whatever, if you want to believe the government statistics, inflation annualized. Now we're running closer to 3%, right? So the rate hikes that they did rapidly in 2022, if you believe the government statistics, right, they have descended. So I see this in my daily life. I think the price level rapidly went up mostly after 2021, 2022. That's when we had this huge surge coming out of the pandemic. And prices are still going up, right? The prices are still inflating, but they're not inflating as quickly. It's not that 8% burst of inflation that I think the Fed was concerned about. Now we're running above target, above their long-term trend. But is it a level that justifies 5% Fed funds rate? I don't think it does. I think the neutral rate, which they always talk about, whenever you're talking about interest rates, right, you have to look at what is the neutral rate. I think the economy is not as strong. It's not growing as fast. It's not as hot as it was back in 2023, right? For example, it's slowing down. You're seeing some signs of deterioration in the labor markets, some signs of deterioration in real estate and other sectors. So because of that, right, like people have to always look at all of the data. And I think you have two schools of thought. You have the school of thought of the hyperboles. I call this like the American HODL school of thought, right? Which is just like, I don't care about any of this macro stuff. I just want to tune it all out. I know Bitcoin's the answer. All roads lead to Bitcoin. Let's just stop wasting time with it. It's kind of a waste of time, Joe. American HODL has literally asked me in several occasions, like, why do you waste so much time like studying and looking into this? And the reason is because I think it's fascinating, right? It's a complex and dynamic system that I want to understand because I do think that there is some times where you can really spot what is severe and what is just par for the course. And your default should be par for the course. Your default shouldn't be that we're going to wake up tomorrow and be eating, cat food under a bridge, right? Like, I think there's so much of I think Bitcoin Twitter that tends to gravitate towards that view. Your default should be like, we're going to be the slow boiling frog. Things are going to perpetually get worse. And just because they're getting worse doesn't mean they have to collapse. That's the big thing I find problematic in a lot of people's analysis.
Yeah, it's funny. George Gammon just recently, again, he's just resurfacing on my timeline and just kind of the same type of thing. And it just funny you mentioned HODL. He needs a little more HODL in his life because he's he just seems like he's constantly searching for, on that little more extreme end, he's searching for numbers and things to justify Bitcoin in essence.
Let
right?
me give you an example. I was in a space with George Gammon back in July or August, one of the month, and it was hosted by Josh Zielinski, the financial quarterback. And I talked to George. We had a back and forth, and it got a little heated. But his big thing was, well, whenever the yield curve uninverts, right? Whenever the long-term rates tend to rise and the short-term rates tend to fall, whenever it becomes uninverted, that's typically the time you want to sell assets. That's typically the time, the market's on the verge of recession. And I said, George, when will you admit that the inverted yield curve was a flawed indicator? He refused to answer it. He wouldn't give an answer on this, but he basically said, I don't know, but how can you know for certain? I'm like, I don't know anything for certain. But I am open-minded enough to know that, and humble enough to know that I can't figure out with absolute certainty where markets are going to go. That's why I buy high-quality, long-term investments, and I don't do a whole lot of day trading. I put on some positional trades. Like right now, I'm very long the 10-year, which was great, right? Like the last 2 days, it worked out great for me. 10-year futures with leverage. But like from my standpoint, like I understand that just because something has happened in the past does not mean it's necessarily going to happen in the future, right? Just because every time there's been an inversion of the yield curve that has meant recessions and assets decline doesn't mean it was going to happen this time. And what have we seen since the curve uninverted? Since the curve uninverted several hundred days ago, you've seen some signs of economic acceleration. And on top of that, Brandon, you have seen asset prices surge higher. Right. So the notion that these things are all going to fall apart. I mean, show me the data. Show me why that has to be the case. Show me the broad spread consumer deterioration among all the quartiles, not just, this is another way they lie with statistics. They'll show you the bottom quartiles who have defaults of credit card debts. They'll show you like the most vulnerable in society, which I have a lot of sympathy for those people. I feel for them because their life is becoming more difficult. But I also know that the majority of the aggregate demand is driven by the upper income individuals, and those folks are doing great. They're sitting with household balance sheets at all-time highs. They're sitting with stock portfolios and bond portfolios and real estate and Bitcoin, and they're saying, I want to go on a vacation because I feel pretty good. I don't know about you, but like you really have to understand this K-shaped economy where some people are really struggling, but are those people, is that cohort enough to drag down aggregate demand to pull us into recession? And I question whether it is.
Taking a step back into just the kind of the bond market in general, what obviously this 40 year plus bull market in bonds, it started breaking out the other way, right? The last few years. I mean, where do you see things? You just talked about. I mean, where do you see things going? How does this get rectified? I mean, like we just said a few minutes ago, long term, these governments have to keep printing. Period. That's all there is to it. How do you see this kind of playing out in the coming years?
Well, this is not to. Okay, so. Let's talk about that language. Okay, I understand why people say printing, because what it connotes with the printing is that basically that like it's coming out of nowhere, it's pulling money out of thin air. But what we know is that in terms of printing, right, the Federal Reserve, doing QE, the Fed's actually drawn down its balance sheet for several years, and the folks on FinTwit just will not acknowledge that they've been doing QT, that their actual balance sheet as holdings, both nominally and as a percentage of GDP, have declined. Right. So what has the government done? The government has borrowed a lot more money. They're continuing to borrow a lot more.
Yeah.
They're running at clips that are effectively wartime from historical purposes, 6 to 7% GDP. They're borrowing a lot of money. But what I want to emphasize that is that, in my mind, and people take a lot of issue with this, I don't view that as printing. And here's why. Because to get that money, someone needs to give the government the money, right? Someone from the private sector or from another country, something outside the government, they have to say, here you go, Janet Yellen, it's yours. Here's your $4 trillion you need to roll U.S. debt. Okay, that is pulling $4 trillion. And some of the folks I talk to on Bitcoin Twitter are just ignoring that. They're ignoring that somebody had $4 trillion. Somebody gave that $4 trillion to the government. Now, I'm all with you on the monetization, taking money from government securities and throwing it on the Fed's balance sheet. But you got to realize that's not happening right now. That hasn't happened for years. The Fed has drawn down its balance sheet. The Fed has been hiking rates and trying to desperately pump the brakes on an overheated, from an inflationary standpoint, economy. But if you're going to say, to your point, your bigger point, which is, is the government going to keep spending? Yes, absolutely. I will guarantee you the government will keep spending at a very high clip. But then the question becomes, if we're going to have an informed discussion, Brandon, is what is the proper rate of government spending? Because the government also pulls in revenue, right? The government
Mm-hmm.
also withdraws revenue in the form of taxation. So one of the things that economists look at is, and if you ever, just to explain this for people that don't have a economics background as I do, from university, it's like the economics argument always, when it comes to spending, it always has to reconcile what is the productive capacity of the country versus what is its spending, right? And the reason you want to start there, and that's gross domestic product, right? You usually want to say it's because you need some metric. It'd be like the analogy, and I'm hesitant to always use personal finance, but let's talk about your house, right? If I only showed you on a paper the expenditures you're making, and I only showed you the debts you take on, credit card debt, household debt, that doesn't really tell you anything. It's kind of irrelevant. Like these guys that show up, and I've seen this from many people in both FinTwit and Bitcoin space. They'll show you this chart that's vertical of U.S. debt, right? I'm sure you've seen that. It goes straight up. It's a parabolic chart, right? Yep. Well, they don't show you the chart that's shown our growth in productivity, which is also it's not parabolic, but it's gone up pretty high, right? That's productive capacity. So what they say, the proper measure, right, you're trying to offset this is you're trying to figure out, what is GDP relative to your debt, or what is GDP relative to your debts and deficits? Like I said, it's 6 to 7%, right? Those give you a better reference. And the reason you want to do that, that's like in the household analogy, that's like the reference between income and your liabilities, right? Your income, assets, liabilities. Now, I'll give you another way to think about the debt issue. Think about it instead of just income, productive capacity to expenditures. Think about it in the context of overall net worth. Okay, what is the net worth of the United States? It's almost very difficult to measure, right? There isn't a single country in the world right now that if you could swap places with the United States, they wouldn't pick it because of our natural resource base, our manufacturing base, our IP, all of our court system, our legal system, friendly neighbors to the north and south. There's aircraft carriers, every single thing. Like every country in the world would be like, if I could switch places with the United States, I probably would, even with all of our problems, even with all of our hardships. Right. So the reason why that's significant is that when you're measuring our liabilities, our debts, our deficits, you have to factor in and we also have the global reserve currency. And we have the bond market behind us, and we have the military, and we have all these other factors. And by the way, our growth relative to the world, our percentage of global GDP in terms of productive capacity, that has actually increased in the last several years. In other words, of what the world is creating, because productive capacity is really wealth. I mean, that's the ability to produce things, that's really wealth. It's not paper money, of course. The ability to produce things and expand that wealth as a percentage of global wealth, of global productivity, that is actually increased. What that means is we are outpacing our peers in terms of growth, which many of our peers have much worse problems than us. And that is significant when you're trying to say, like, okay, do I put capital here? Do I put capital here? Do I trust the U.S. Treasury market, or do I trust the Chinese bond market or German bunds or some other competitor? Where are you going to put that money? That's the question.
Yeah, absolutely. It really is fascinating. It makes me think of a lot, like you kind of mentioned personal finance, and that's what made me think of it. It's like the Dave Ramsey school almost versus I don't know, like a Kiyosaki or some of these older guys that have taught for years and years. And like the Kiyosaki school was like, hey, just increase your asset base, right? Like increase cash flow, increase your asset base, versus Dave Ramsey was like, cut all the debt, have no debt. And I feel like that's where people like take that view on like America, where it's like they just focus on the debt instead of like, hey, like all these things over here, we have all these productive things going on too. And that just gets totally discarded in the debate completely.
Yeah. I mean, in the other context, and the other important thing about debt is that, are you against, let me ask you a question. Are you against debt in general? Like, do you think all debt is bad? I don't.
No, absolutely not.
I think there's productive debt, like, right. So I'll give you examples of things I think that were productive enterprises that we engaged in, right? So, to me, the federal funding that went to an interstate highway system was extraordinarily, productive debt, right?
Yeah.
pretty useful. The debt that went into building the Hoover Dam, which provided tons of electricity, right? Like that was productive debt. There are plenty of ways to spend money that are productive. There are also ways that I think are wasteful. And that's the key, right? Like entitlement programs that are bloated and underfunded I think that a lot of those folks would be better off if they would have, instead of having that money taken from them in a paycheck, had that extra cash every paycheck to invest and have opportunities, right? I think those programs, which are underfunded, and I think they will not provide a quality of life, they were really put in place more of a safety net for a certain segment of the population, like Social Security, for example. It's a perfect example. Put in place originally to lift seniors out of poverty in an era where there were much fewer people living to be 65 and older and drawing in the system, right? So it was never meant to be sort of a UBI for folks when they get older, right? Just because people didn't live that long. That we live in a totally different system, right? So from the 1930s, where some of these programs were put in place. People are living much longer. So on a net basis, for future generations coming up right now, forget the promises made to past generations that are going to draw on the system. Is it better for you, Brandon, to have that extra money that they're withdrawing from your paycheck for FICA taxes and for Social Security? Is that better to put in your pocket so you could choose that? Or is it good to keep this vestige of an old system that has grown much more antiquated, I think, than what we need for this time? We need to think differently and sort of discard these things. So again, the issue is not, is there too much spending? The issue is,
if you're liking this interview, but you're just wondering, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're going to love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. BTC-TC.com. You're going to absolutely love these things. Now back to the show.
Is there too much spending relative to our productive capacity? And is that going to crush future growth potential? Because that's the problem with debt. The problem with debt is that too much debt crushes future growth potential. It deprives resources from the private sector, and that becomes to be a vicious cycle. It gets worse and worse and worse, and it doesn't necessarily end in collapse because the government can always monetize the debts, right? But what it does is it destroys real purchasing power. It creates a lot of apathy in society. It destroys human potential to create and innovate and produce, and it causes this widening wealth inequality gap, which I think the story of our time. When the Fed and when Treasury refuses to let anyone take their medicine and have any pain, when it refuses to spend deficit spending, what it's doing is it's basically telling people that the Kawasaki method you just brought up is the correct way. It's telling the people that are sophisticated with access to resources and capital, plow it all into investments, buy as much Bitcoin. I mean, I can't tell you how many times I hear people on X say, I'm borrowing this to buy Bitcoin. I'm borrowing this. I'm leveraging this. I'm trying to get my house. I'm not saying they're crazy or wrong. I actually think it makes a lot of sense when you have a system where they say, we're not going to allow a recession to take hold. We're not going to allow deleveraging.
Yep. Those who have debt win. And you can make an argument that even people who have bad debt. I mean, I would love to get your thought on this. Actually, this is not where I wanted to go. We'll transition in a second to some of the Doge. I want to get your thoughts on this, but I honestly think if there are, like, if we get to a point where there are foreclosures at some point, which I don't know if there will be necessarily, like at a large scale, like we saw 15 years ago, is they will swoop in before that even happens. But can you imagine? I mean, with social media now, Chase Bank kicked the Johnson family out of their house. Like, people will be up and down the streets. That will end so quickly, and people will be bailed out. So having bad debt, even, or things that aren't productive, whatever you want to call it, those will get bailed out too. Car loans, like all these things that are coming down the pike eventually.
Yeah.
Bad debt.
Well, it's bad debt is good for the consumer, right? Like, I run into this routinely in legal practice when we file suits against folks because, people will have hundreds of thousands of dollars of liabilities and credit card debts and other things that they've accrued, and they've benefited from that. They've lived off that, right?
Yes.
And then it goes to bankruptcy court and it's discharged and they get a fresh start, right? And like, yes, their credit is wrecked, but
the bank eats it.
They still had the benefit of a lot of that spending, and the bank writes it off, and obviously it hurts the bank. But what it does, though, and I think when you say it's good in the short term for the consumer, But what's bad for is that in the long term, this makes banks, commercial banks, less willing to lend to regular average day people, right? They'll look for the absolute prime candidates to lend money to. So what does that do? That further widens the wealth inequality gap, because if you're wealthy and sophisticated and
Raises
have resources
rates.
and have assets, you have access to liquidity, and the poor people don't. Which is problematic, right? And we've seen some trends of that. We've seen that, again, that bottom cohort that's really struggling, they don't have access to capital. They don't have access to capital to survive, let alone access to liquidity for investments or to buy Bitcoin or buy other things. So do you see what that does to a society? I mean, you can piece it together how it's creating the K shape that we're talking about. I mean, it's problematic.
I don't know if you follow Richard Duncan at all. I haven't as much in the last few years, but I used to, 10 years ago. And he'd always say that we're really in, which is no shock to anyone at this point, but we're in a creditism, crony capitalism, but creditism society. And his big thing was, U.S. should be pouring, and it's funny because now it's coming to fruition in a sense of like people are selling, hey, print, hit the printer and, for all intents and purposes, and buy Bitcoin. He was always saying, 10 years ago, hey, you should be hitting the printer and then investing into AI. Like the government should be doing those things. Like, why aren't we doing those? It might have even been 15 years ago, but it just made me think of that world where we're now, he was talking about like 15, 20 years ago. And now we're coming into that where it's like people are finally talking about hitting the printer button, so to speak, and then, hey, we're going to pour it into this, like you said, good investments versus bad investments. I think it's a really important point. But I want to get your thoughts on. Well, go ahead.
No, I would just say, like, it's a very simple analysis that you should conduct. Okay, number one, the government should spend the majority of its money on something that's going to increase long run productivity. It's that simple. And if you're not, and you can make an argument for every single federal expenditure, whether it does or doesn't do that. For example, okay, military spending. Okay, I know people complain about bloated military spending, but there is plenty of military spending that I think indirectly increases our productive output because it creates our status as a global hegemon. So some of that spending is good, right? Some is bloated, right? We can talk about at the margins, cutting some of that. There are also other cohorts of spending that's absolutely terrible, completely wasteful, does not contribute to any productivity. But one thing that I'm strongly in favor of, and I tend to be very, free market oriented, but I really believe in investing in early childhood education. Like, to me, like investing in the future, investing in early childhood education, being able to make it where no matter where you're born, no matter what zip code you live in, you have access to very early on intervention. We see the data, we see the statistics, we know how much that matters. And yes, if you don't want to use the government programs, you don't want to have access to that, fine. But it creates profound benefits to society when, no matter where you are, you're going to have the ability to get a high quality education. And the data shows the earlier you intervene, the more resources you pump into that in a concerted way, you're going to have long run outcomes that are going to be really beneficial from society. You're going to have lower rates of crime. You're going to have a better job force, a more educated job force. So, like, in terms of education spending, it should be primarily directed at early education, because we know how important it is. But that's just one example. There's plenty of things we can go down the list on. If there's wasteful spending, right, that does not increase our productive output, we really have to scrutinize that and see, does it make sense to keep spending this much money on it? Oops.
This transitions perfectly into Doge. I wanted to ask you about this quick. So wasteful spending, etc. Have these boys painted themselves into a corner? Meaning, they're talking big talk and there's all kinds of campaign talk. We're going to cut 2 trillion. We're going to do this and that. What is the job they have laid out before them, again, so to speak? What does this look like? Are they going to be able to cut anything? Is it just going to be outgrow the system kind of to what we've been talking about a little bit? What does that look like to you?
So I'm not negative on it. I think I really hope it succeeds. I said publicly, when Elon came out and said, "Oh, we're going to cut 2 trillion," I knew that was just a joke number. And to his credit, right, even before Trump has taken office, he's walked that number back, right? Yep. Elon and Trump have this similarity in the way that they both sort of overpromise a lot of things, and even if they don't deliver on everything they're promising, if they hit 75% of it or 50% of it, that's huge, right? Elon does this with all of his companies. He'll constantly give out these boastful expectations that he doesn't really hit, but he still hits a lot. And yes, it may seem disappointing to some, but it's still very meaningful, the end result. So to me, like, I don't think they're going to be able to cut 2 trillion. I think there's plenty they can do to work on this. But ultimately, if you're going to really tackle our debt and deficits, the way you need to do it is you need to do it through the Congress. You need to do it through reforms of the entitlement programs. That is the single biggest way you can do it. Now, I'm skeptical whether anything happens through Congress. I don't think they're going to waste the political capital to try to reform, Medicare, Medicaid, Social Security, these sort of bigger expenditures or military spending. I don't think that gets through. But what I want to bring up that I think is critical for anybody who's being hostile towards Trump as he's intervening here is that, one of the big jobs of the president is to sort of set the message and set the agenda and to prioritize where the country's going. So, even if you can't achieve everything you're setting out to do, the fact that they're talking about it and raising it as a subject of conversation is meaningful. It's a signaling channel that produces, I think, some result. And that's how we need to get back to that. I mean, the president, in many ways, like he has a role, or he or she has a role, just to try to message to the country where we need to be, what our aspirations are, what the goal of America is, where we're moving forward. It's kind of like any other CEO or a leader of a sports team, right? They have to sort of set expectations and try to move toward those expectations. Now, why I think Doge is important is because I do think there's waste and fraud and abuse and things in the government that they need to eliminate. However, we have to be realistic about what it's going to be. But what I found was really interesting, I commented on this, is that did you see this issue with the Hollywood ambassadors that he appointed, like Sylvester
Mel Gibson, all that stuff? Yeah,
people are laughing about that and ridiculing it. I think the idea is brilliant. Like, I really do. Like, and the reason is because, like, arts and entertainment are so vibrant and important for our culture. And when you get back into trying to create that culture, I think that influences and it permeates through the zeitgeist of society. Yeah. They start to think and be more hopeful and more optimistic. And the crucial thing we need to confront, I think there's just this apathy. I don't know if you sense this, but I sense a lot of apathy among younger people and Gen Xers and other people that have been shut out. And people need to believe in something again. That's really important.
100%. I would honestly contest, Joe. Apathy is why we're here. I feel, not only do I feel it, I think there's been decades of apathy and just indifference. And I think that's why we are here, and malaise that has created this situation we're in. So yeah, I couldn't agree more. I think it is brilliant. What do you think about, what's the Powell future as well? So I know there's a couple things in there, but
I mean, to me, that's one of the biggest stories that's going to come because, we're entering into an environment where one of two things is going to happen. Either inflation is just going to trend lower to target in sort of this immaculate disinflation, which I'm skeptical of. I don't think it's just going to slow down to 2% and hover there. I think because of a lot of structural issues that were not present prior to COVID, I think inflation's stickier. It doesn't mean you're going back to a surge to 8% or 7%, which is not my view, not my base case. But it can stay closer to 3 than it can to 2. And the primary reason is because of housing and structural issues with the housing market and people locked in at low rates and, no recession that's creating forced sellers to bring prices down. You've got issues with housing that I think are going to, they're going to last. They're going to linger for quite a while. So because of that, and you see housing makes up, I don't know about you, but it makes up the bulk of a lot of people's expenses. If you tie in real estate, insurance, shelter costs in general, it definitely is massive for people's budgets. So because of that, you can expect, the official government statistics of CPI to remain closer to 3, I think. I don't think they're just going to immaculately disinflate. And in that environment, like, what does the Fed do? The Fed has indicated that they believe they're slightly restrictive. Now, what that means is, in Fed speak, is that they think the neutral rate, which is a rate that is neither accommodative, it's nor incentivizing growth, nor restrictive, is somewhat below where we're currently at on the Fed funds rate. So that, give or take a couple cuts, maybe 50 basis point cut, you're basically at the neutral rate. If Powell is right on that, and inflation stays near 3%, okay, you can expect him to. I think he's going to hold pat and not be aggressively cutting. Now, if the economy deteriorates, that's a different story. But the reason I bring this up is because I think Trump is anchored to very low interest rates, because that's where, most people are familiar with. They're familiar with interest rates, 3%, 4% for real estate, and they're anchored to that. And if there's pressure between him and Powell, my view is, and I've said this publicly, that I don't believe Powell is just, you're going to have to drag him out of the Eccles building. You're going to have to literally like send in, the Marines to get him, because I don't think he's leaving. He said publicly numerous times that the president doesn't have the authority to fire me. That he was asked during one of the FOMCs last year that, if the president asked you to step down, would you? And he said no. And then there's this follow-up question, and he, emphasized it. I felt like he was ready to pound his fist. He says, not permitted under the law. That's the quote. It's not permitted under the law for the president to fire me. One thing I know about Donald Trump is when you tell Donald Trump you cannot do something, that almost is like poking the bear. It's like it's incentivizing him to come after you and say, you want to bet? You want to bet I can't do this? And then you get this interesting dynamic where, if we read a headline, you're gone, you're fired, his classic line from The Apprentice,
Yes.
Jerome Powell, you're fired. What happens in that scenario? Well, I'll tell you what happens. Powell's going to say, no, I'm not, because my Fed lawyers say that I'm still the Fed chair. That could create absolute chaos in the system.
That'd be chaos. Yeah.
Yeah, because it would have to be resolved by courts.
Right.
Court would have to say, can the president do this? Can the president fire? And you'd have actors in the government just blatantly disobeying the Federal Reserve. And, the Federal Reserve is a really interesting structure. People say it's part of the government, but it's really not. It's technically like a quasi
amazing discovery period during that.
Yeah. If you go look on the Fed's website, I always thought this was fascinating. If you go on the Fed's website, the Fed itself refers to it as a quasi governmental entity. I don't know what that is. I think that is so kind of interesting. It's created by an act of Congress. There is the Federal Reserve Act that creates the Federal Reserve Act. So, it was created by the government, but it views itself, I think, as separate and distinct from the executive branch or the legislative branch, it's just weird. And I don't think that people understand and appreciate that. I think most people, if you ask regular guys on the street, they'll say, oh, Jerome Powell, if they know who he is, they'll say, oh, he's part of the government, right? No, not really.
Yeah, that would be incredible. I remember last year, do you remember or maybe it was 2 years ago, when the Fed Now t-shirts came out that Bitcoin Magazine had, and then the Fed had the cease and desist. And I think it was Nolan Bowerly, or it was a couple of people that were trying to attach something to I forget what it was, but they were trying to attach something to that case to make it, because they were like, well, what do you mean? You're a public, you're a public entity, so we can say whatever we want. And then to force them to say no, we're private, but of course, it never didn't come to fruition. But yeah, it's a fascinating fight. So the SBR, what are your thoughts on this going forward? Is it, a day one thing? Is it, first 6 months, effects of it? What's your take on what's going on here?
Okay. So my base case is that I think they shuffle around, reallocate some Bitcoin that they're currently holding into a reserve, and that they propose and basically, kick to Congress the idea of acquiring additional Bitcoin. It's very easy to sort of cash the check that, he wrote to Bitcoiners saying yeah, I'm in support of an SBR. I just want the bill passed through Congress, and Senator Lummis and others just get it through. And then what we know happens is, a lot of things die in Congress.
Shenanigans.
It's an old politician's trick, right? They can be in favor of something knowing it will never happen by just saying, I want them to do it. I don't believe that they're going to go out on a limb, and I could be wrong, right? But I don't believe, based on everything I've read and heard, they're going to go out on a limb and via executive order attempt to acquire additional Bitcoin. We'll see. I do believe you're going to hear something fairly quickly as soon as he takes office about the SBR and his intentions. So I guess we'll know next week.
Yeah, it'd be fascinating. I mean, it feels like an easy win to get Bitcoiners off your back to a degree. It's free Ross, right? And that's something right there.
I think that's going to happen for sure.
Yeah. It sounds like it is, right? Like the rumblings, it just sounds like it will, which would be amazing. So that's one huge step. What do you think going forward? And this is kind of playing off that. What do you think they do over the next year, maybe the year or two with, is it capital gains? What do you foresee them doing? Obviously it's a very crypto friendly administration. Obviously, what do you see them attacking when it comes to crypto to deregulate or take things away to make it easier for people to operate within that system?
So, to get a bill through the Congress, you have to prioritize, right? There's only so many things you get through because we have sort of dysfunctional Congresses. And my view is the priority is like this. The number one priority that I keep hearing from all my contacts on the Hill, people like Jason Brett and others, and I actually talked to a Democratic lawmaker about this, is that the number one issue is the stablecoins. Like they're so focused on stable. They got Paul Ryan out there openly campaigning for stablecoin legislation, right?
Wild. All left field.
So stablecoins are at the top of the list. The second issue, I think, is a market structure bill. Now, those two issues may get combined. I hope they don't, because the more you combine into a bill, in some respects, unless it's some big omnibus, it's harder to get passed. I hope that you just get some one-off pieces of legislation for stablecoin and then another one for a market structure. But regarding the capital gains, I think the most likely thing you would see would be some sort of de minimis exemption. I don't believe under any circumstance you're going to get some broad capital gains tax that relief that comes through that, all Bitcoin is suddenly not taxed. I would bet heavily against that. I think there's severe opposition to that. I know personally senators that would block that. It would not get through. So to me, I think the most you could get is this idea that they floated. Are you familiar with like the de minimis exemption that some people have talked about?
Yeah, it's a certain level threshold. Could you explain that for someone who might not know?
Yeah, so there's a couple different ideas of the level you would do, but it would be effectively, some exemption similar to like foreign exchange currencies where, if I buy euros and the euros appreciate, below a certain threshold, I don't have to, that's not taxable. That's not a taxable event. If you did $500 or $200 or something, I think that would be great because it would drive a lot of payments. I think it would drive a lot more experiments. And for me, like, it's super annoying. I find this even as a Bitcoiner, like if I'm, paying for something that's sub $100 to have to track that as a taxable event, it makes me not want to use Bitcoin for anything. Like I would, that alone, just the headache of having to do that, I think is a huge disincentive. So a lot of these people out there, this is really important, I think, whenever you hear these arguments, well, nobody uses Bitcoin as a payment system. Well, there's an obvious reason for that. It's because it's completely onerous and difficult, and they make it, they make you fear the IRS if you miss a taxable event. How can you complain about no one using Bitcoin for a payments rail when there's a disadvantageous taxing rule that every single $5 cup of coffee is a taxable event if I've held Bitcoin for any appreciable time? I got to do long-term capital gains because I bought a latte at Starbucks. Come on, who would do that? And then the other issue is that I'm not a big believer that you should have laws on the books that are flagrantly violated like all the time, right? So we know based on data from various sources that people are just not reporting their taxes and not reporting their gains on crypto taxes. There's widespread underreporting. So because of that, that's another issue. Like, okay, do you want to have a system in place that is so difficult to follow and that is being widely violated, making criminals out of a lot of people? No, that's not good for society either. So I really hope they address these issues. But again, I want to temper that because if there's one thing I study political science, extensively and follow the Congress. The one thing I know is that even bills that people agree on can't get through the Congress. Like it's like bizarre. Like this has 80% support, but we can't get it through because this senator wants a bridge built in his town. And he's holding up the whole thing before he can get the broader bill passed. It's his leverage against something else. And it's like they say, lawmaking's like making sausage. You don't want to see how it works.
Yeah. That's so true. That's a whole nother episode just about talking about all that stuff. What, or speaking of capital gains, how do you think the lending? So Coinbase, obviously, just in the last day or two came out with their lending product, quote unquote. And how do you think, my question is not about Coinbase, it's about lending in general. And this capital gains talk, that's one part, but the other side is lending. How do you think lending changes the sell pressure? People not selling as much, because obviously if you can lend and there's more products coming out. I know Strike Jack Mallers has talked about this. Have you gone down this rabbit hole much at all, just thinking about the sell pressure that might not be there as much because of people lending and holding and just lending and getting fiat for it?
Mm-hmm. Yeah, I think that the lending products that are available right now are going to be dwarfed, and they're going to look like trivial playthings compared to what's coming in the next 5 years. I think many commercial banks will offer lending solutions. I think many brokerage houses will offer lending solutions. I, in particular, I think some of the major brokerage houses are going to open up deposits for Bitcoin. I'm not going to name specific ones, but I understand there will be some major firms, household names that are traditional brokerage houses that you would recognize names of, that will allow you to deposit Bitcoin, then draw upon it, get margin from it, similar to how you would equities. And I think that comes a lot faster. So I know why Coinbase is trying to get there. They're trying to be first to market, right? And speed kills.
Right.
You get all that. But I think you're going to see much bigger players that I would have much more confidence in that are providing these over time. And that's going to be huge, right? That's going to be a big issue for liquidity. It's also going to be a little bit, keep in mind, this when you lever a system, right, you increase vulnerability too if there's a liquidity crisis. This is why you see these events where, I always try to explain to people, Bitcoin's selling off. Like, remember when the yen carry trade blew up? Do you remember that in August? How Bitcoin went down? I think it went just below 50K, if memory serves. Right? It was like 49,000 for like 5 minutes. Yep. In that environment, that's just it. It's not that people woke up and decided to sell their Bitcoin. That's not what happened. Okay, what happened is there's levered entities, and they're levered across different asset classes. And to meet their leverage requirements, because they're getting margin called, they have to sell everything in an indiscriminate fashion. So, if the yen carry trade is blowing up and they've got exposure to that, they have to sell their stocks, they have to sell some of their bonds, they have to sell their Bitcoin, right? And this causes a cascade. So the reason why that's important, right, is that we will get another bear market, right? Maybe not a 80% or 90% drawdown, but I can guarantee you every markets have cycles, and there will be a bear market. And in that environment, if people have levered Bitcoin, okay, which is what a loan is, right? You're borrowing against it. You have to post collateral, right? And that's a vicious cycle. It sucks more liquidity, meaning you have to sell something else. So whenever you lever anything, you do increase the vulnerability, but it also helps you the upside, right? If you don't have to sell your Bitcoin, that can be a positive catalyst for Bitcoin going higher than I think people expect, which is huge. So all I'm saying is that when you increase leverage, you're increasing volatility, which is what I think you see in a lot of different markets.
Yeah, absolutely. I got a handful left here for you.
Sure.
So Luke Groman been making the rounds, obviously, on some of the Bitcoin channels. I would love to get your thoughts on him. I'm sure you've seen some of this stuff. If you haven't, let me know. But I'm sure you've seen some of it. Him talking about Bitcoin being the new oil. Not necessarily. I think that's his prognostication. That's not like his thing. I don't think that he's saying, "Oh, it's going to be this." But I would love for you to touch on that and talk about liquidity in the system and where you think this liquidity is going. Bricks. I would love for your thoughts on just kind of all of that, some of this real macro, just global geopolitics.
Which one you want to start? Where should we start?
Let's do Bitcoin and oil being the new oil and this play for selling gold and stuff like that.
Okay. So gold plays a role on central bank balance sheets, right? There's actors that hold significant amounts of gold, right? The United States actually, as a percentage of its GDP, I think is at one of the lowest points of its gold holdings, right? It's moving away from that. Yeah. And I think the drive towards gold is driven primarily by some sort of desperation, I would call it, to try to get away from sovereign debt, try to get away from the dollar. I don't think it works for a variety of structural reasons, because in the system, as much as people in the Bitcoin space focus on the central banks and governments, they still think the commercial banks play a huge role. The commercial banks, due to a lot of regulation, international Basel liquidity requirements, they have to hold treasuries. Okay, so like they're legally obligated. If you want to operate in a heavily regulated system of banking infrastructure, they're obligated to hold these treasuries, and gold does not provide a alternative to them under current law. Now, there's some exceptions to that at the margin, but I'm just speaking generally because we're short on time here. Now, what I would say is, like, the fact that countries and entities are desperate for gold or some alternative to the dollar shows you that how prolific and powerful and hegemonic the dollar is. And it is not an argument against the dollar. In fact, it's an argument against the decline of the dollar, which people consistently try to parrot and repeat. I think over the next 10 years, the dollar is more likely to strengthen relative to other foreign currencies than it is to weaken. I'm a big believer in the dollar milkshake theory, in that idea. And I think where does Bitcoin play in this? Bitcoin, and again, don't take this the wrong way because I'm very bullish on Bitcoin. It plays a trivial role currently globally in the financial and monetary systems. It is not big enough. It's not liquid enough. There aren't enough players. There aren't enough leverage that can be provided. Whereas, there are entities I'm available that will give you substantial leverage against gold holdings. The same is not true for Bitcoin. You have to have niche players that are not provide. I'm talking, tens, if not hundreds of billions of dollars of leverage that can come through various different, entities, for example, levering treasuries, which are, legally mandated to be reserve assets. So to me, like these ideas to say like, oh, Bitcoin's the new oil, or we're going to settle things in Bitcoin. I think that eventually we move in that direction where it becomes a global reserve. But I think it becomes a global reserve in the way that treasuries are a global reserve, where the banking systems themselves are holding it. And that is what needs to change first. People tend to overemphasize the importance of central banks and underestimate the importance of commercial banks, and particularly shadow banks, which we don't even have much insight into. So all this is to say, in a long way, that I think that the idea that people float out there is one that's more of aspiration than any real data or fact. Even the Trump administration, they're not talking, again, they're talking about like the strategic importance of Bitcoin, having a Bitcoin reserve. But keep in mind, they also hold corn as a strategic reserve. They also hold, a variety of different, I think they have honey as a strategic reserve. A variety of different, commodities are held. Just because it's held as a strategic reserve does not mean that is somehow, the underpinning of the global financial or monetary system. And it's also not, to me, negative on Bitcoin or its role where it could move there. But I think we're decades away from that. I don't think that I don't think we're in the twilight of fiat, as some people on FinTwit will try to tell you. I think we got a long runway.
Do you think, I'll get your thoughts on BRICS here briefly, but do you think it is a gradually and suddenly moment, or do you think, and you alluded to this earlier, do you think it is more of a whimper? Like, do you think these systems just kind of just chug along parallel to each other for a few decades, and they kind of just start changing basically, and as older generations go away and sunset, and then the newer generations come up and be like, what the hell are we doing? Is that kind of just how you see it playing out? I look
at something that's going to change sort of the structure of the market. Okay. That's the key thing. I'll tell you, my bias is that I think it's going to take a lot longer than people expect. That's my bias. I could be totally wrong on that, but what I don't really find that to be particularly interesting, because all I need to do is I need to look at signs, okay, of real stress. Okay. And here's what I know to be the case. There are numerous fiat currencies that are much weaker than the dollar, and they're not failing. Okay. You see some people point to Argentina. You see people point to Zimbabwe, right? Like countries at the margin. Yeah. But even those countries, like, they somehow in many ways are able to muddle along and make it work for longer than people think. So the reason I start there is that before the dollar is truly threatened, before the euro is truly threatened, before these other currencies are really, in the basket, I think that you're going to see other widespread failures of economies. And the question then becomes, like, what do they do at that point? Do they dollarize? Which I think that most people don't actually appreciate, that, that there is some effort in emerging markets to consistently become dollarized, which here's that. If that occurs, what's that?
Coins, right? That plays into tether and stable coins, right?
I mean, look, we could see a situation where dollar dominance rises for the next 30 years and more of the alternatives to the dollar are driven out, right? Yeah. That there's so much of a desire for dollars. To me, that's not the end of fiat. That's not the end of collapsing government securities. Now, in that dynamic, Bitcoin can do really well. Bitcoin can surge north of, $2 to $5, $10 million, right? But it doesn't mean that the current big gorilla in the system is just disappearing. So, my view is like the BRICS. BRICS is a perfect example. They recognize the system's not fair to them. They're recognizing they're being abused. They're desperate to try to come up with a solution. and they're struggling. Okay, full stop. They are trying to figure out something that they can work and something they can agree to, and it's problematic. What are the challenges for them? The challenges are they're very different countries, and depending on how the currency they propose, or I know that I've read some different ideas that they floated out there. There's some people that would benefit, some people would be sort of more disadvantaged from moving to what some of the proposals they have are. So from my standpoint, is like it's a collective action problem. How do you get them to agree, and how do you force them to agree? And then even if the countries, even if the governments agree, what about the private citizens? Because private citizens have the ability to say, okay, I understand that you're trying to use this BRICS currency, but we really just want dollars. And you brought up George Gammon, so I'll raise one point I'm in violent agreement with him on. Okay, one thing that I think is difficult for us as Western American or Canadian Bitcoiners to grapple with is that many countries across the world who have citizens who have been fortunate enough to hold dollars, they have seen the cost of goods and services in their local economies decline. I want to repeat that. By holding dollars, they're getting more food, they're getting more energy, they're getting more housing in their local economy. So it's not just, people say, oh, it's just the cleanest dirty shirt, all fiat's going to zero, it's all disappearing. No, I held $100,000 and I live in, an emerging market. My $100,000 can now buy more house. It can buy more cars. It can buy more groceries. Okay. That's really important to understand, because they don't view inflation of the dollar in the same way we do. They view it in the sense of like, if I just hold dollars, that's all I got to do. I'll have more money in 2 years. I'll be able to afford more. Now, many of them can't. They're very poor. They can't hold dollars, or they don't have access to dollars, which is another problem. But what does that look like in a world where, everybody with a smartphone can get access to USDC or USDT? And this is why I think, I always say you should trust what the message the market's telling you. The market is telling you that there is overwhelming demand for stables in emerging markets. And why is that? It's because there's demand for the dollar, and they trust the dollar. And you shouldn't discount that if you're trying to read the tea leaves of when this big transition or the big crash happens. Don't overlook that. I mean, that tells you the dollar is still, the preferred currency medium of exchange in the world.
Yeah, it is truly the gorilla in the room. That is fascinating. Are you? How do you look? Explain to people, I guess, with Bitcoin being because everyone is like it's an inflation hedge, and then going back to George again, we're just using George as a placeholder here. But he was battling people again the other day. It's like, well, so much for a store value for Bitcoin, CPI or whatever, and it was just like consumer price inflation. It was like, yeah, Bitcoin's not a store of value for that in the short term, and people, it's monetary inflation, George. How do you, because my question is, again, just liquidity going forward, global M2, stuff like that. How do you see liquidity just globally, kind of wrapping this whole macro part of this up? Where do you see things kind of headed in that sense? And how do you see Bitcoin shaping that and trying to put a pin in that? Is it, people keep looking at it as like, it's a CPI, where it's off of that. And then you got a lot of the crowd, no, it's monetary inflation, that the gauge for that.
Yeah. So my mental model of Bitcoin is as follows. I think that Bitcoin is an alternative system that's being built separate and apart from the current system. And I view exposure to Bitcoin by holding it as effectively a call option on that system. Okay. I don't equate it to insurance or real estate or any of these other things. I think you're saying like this is a system that could work. It could become the backbone of a global financial system. It could become a global reserve asset. And your exposure to Bitcoin is entirely based on the fact that that system could get enough adoption both by private and governmental actors to really propel it to be an alternative to sovereign bonds, sovereign debt. That's how I view it. And these arguments in the short run of inflation, debasement, things, I understand why people want to frame it in that lens, but I don't think it's particularly helpful because the reason you say, because, if there's an inflationary impulse, there could be action from policymakers, which hurts liquidity, which can cause the asset to crash, and et cetera. Like if the U.S. stock market crashed 60% tomorrow, I'm sorry, Bitcoin's not going to do well. I can guarantee you that, because there's enough traditional players that are going to have to sell their Bitcoin, and they hold it all. So to me, like, I think that the hopeful way to look at this is like, if my bet on Bitcoin is not that the system's going to rapidly change, my bet on the Bitcoin is that I say that the system is going to continue as it currently is for a long time. It's going to continue with more and more of expenditures, more and more debt. I think it's going to continue with a loss of, I think, a gradual loss of confidence in sovereign bonds over time.
Mm-hmm.
Nothing dire, but over, say, the next 2 decades.
Mm-hmm.
And I think people are going to look for an alternative. And Bitcoin is liquid, it's deep, it's got a lot of market participants that believe in it, a lot of people that are using it as their primary reserve. And as that belief grows, I think there are more and more people that will, convert others into that belief. And I do believe the end game that I really want to see at some point is banks saying, look, and also not just saying, but like society is allowing banking structures to hold Bitcoin as a reserve against their liabilities that are in extending credit. So like that's the end game, where you have it used sort of as a settlement layer between banks, where banks hold it primarily as a reserve asset as an alternative in addition to treasuries. That's massive. So, getting bogged down in these things, I think is beside the point. Like George tends to fixate on this, and what Lynn Alden would say, and she's made this argument to George directly, and he just refused to acknowledge it, is that, if you are inflating the overall money supply, if you're spending a lot more money, it's not a 1-for-1 equivalent with consumer prices. In other words, you print a lot of money, quote unquote, or spend a lot of money. It's not like you're instantly going to surge higher. There's a lag effect. So that inflationary impulse can come later, and Bitcoin as a monetary asset can actually move ahead of that inflationary impulse, which is what we saw, right? The price of Bitcoin was surging in 2020 and early 2021. The inflation really started to pick up in I'd say mid 2021, when we were sort of emerging from the pandemic. So there's lead and lags, and I think the monetary assets took off a lot faster than the consumer prices, based on the intervention that was done from fiscal and monetary authorities.
All right, last two. I would like for you to unpack your Bitcoin, your stocks Bitcoin call by end of February.
Oh, end of February?
Yeah. Well, that was what you had said, right? I think that was one of your calls of what it was going to be. I think it was 120,000 or something like that for Bitcoin, or I can't remember exactly what it was, but.
Well, no, I think we were going to make a new all-time high before the 21st.
That's what it was. Yeah, thank
you. As we're recording this, we're at like 10. I don't think that's that crazy of a call. I mean, when I said that, I think we were in the 90s. I think it was 93, 94.
Yeah.
As we're recording this, it's 104. Which, so we're 4 or 5% off. I think you could get it next week. In terms of where are we going, to me, I think that you're going to see probably a push into the 110s. Okay. I would be very surprised if we got above 125 by the end of February. It's possible, right? But that's a big move. And again, it's very important when you're talking about Bitcoin, I think, to talk about and I get into arguments with people about this, but okay, if the Bitcoin price wicks up to 129, okay, and violently sells down to 115, to me, that's not a real move. Okay, that's like a liquidation move. It's like 10 minutes. It's 10 minutes. I look at, and for those that aren't familiar, the traders look at like a daily closing price, and the Bitcoin market doesn't close, as you know, right? But there's an understood time where this is the market close of the day. And the reason that's important is because I want to see a level that can be sustained at least for a day before I consider real price action. If Bitcoin wicked up to 150 for one day and then sold down to 100, people they would say, yeah, we went to 150, but it wasn't like a real move. It wasn't with real volume, wasn't real conviction. It couldn't sustain the prices. It's just all that's happening there, Brandon, is there's like slippage on the order book, and the order book's pumping up, and then you're correcting down.
Yeah.
You know what I'm saying? So to me, like a sustained price above 120 by the end of February is possible. I'm not totally convinced of it, but I definitely think we'll make a new all-time high before the 21st. There's some options activity that I was looking at that make a lot of sense. And this Bitcoin market is very different, I think, than prior cycles. I know people will dispute me on that, but the price moves much more orderly and regularly, and there's sort of like this institutional bid. It doesn't sell off violently.
Mm-hmm.
I would argue that for most of 2020, it was just sort of like a steady climb with little bursts here. Right? For example, we got the post-election burst, right? But then you kind of hovered in the 90s for a little bit. Then you get the burst above 100K. Then it came back down, right? And then it's found consolidation. It's just sort of like more orderly. If you've been around like I have in Bitcoin for a while, in 2015, 2017, you saw like 40% climb and 50% run back, right? Like it was like very quick. Like you don't really see that, right? It's a different market. I mean, after the ETFs launch, for example, we trended sideways for like 5 months, 6 months.
True. Yeah.
Like, I mean, that wasn't like a traditional market move. So I throw out all that stuff about this is what Bitcoin always does, because I think that we're in a different era.
Yeah. No, I tend to agree with that too. All right, last one. What are your, and this is one of the few things I haven't heard you touch on for whatever reason, but just Saylor in general, and just kind of overall thoughts on what he is doing with MicroStrategy and what that looks like to you.
I mean, I'm positive on it. I have some very limited MicroStrategy, nothing compared to Bitcoin, but some limited MicroStrategy exposure. I think it's cool what he's doing. I hope for the best for him. I believe that the MicroStrategy approach will continue to work so long as Bitcoin remains in a bull market. And I think that if Bitcoin starts to decline, that's going to really hurt MSTR. And my fear is that there's a lot of players that are very levered to MSTR. They're levered with options and other exposure. And when you do that, when you increase something like time decay, and you introduce something like time decay, and you introduce all these other vehicles, it becomes difficult, and you're taking on unnecessary risk with an asset like Bitcoin. It's going to trend higher. It's going to do well. So on a risk reward basis, I see there's a justification for perhaps some limited MSTR exposure. Right. And I know a lot of people that are not just some, they have like their whole, there's a guy on Twitter all the time. He's got like his whole parents' retirement in MSTR. I hope it works out for him. I mean, it's great, right? Like I'm not anti any of this stuff. I've seen this game too many times where, when people think markets can't go down, they tend to start going down for a variety of reasons. And keep in mind, I think you could have a situation. I don't think it's impossible for a situation for MSTR to decline while Bitcoin still trends higher. I think that's entirely possible. And there's structural reasons for it we probably can't get into because I got to jump in a second. But like the idea that an asset that is a derivative of Bitcoin can't decline while Bitcoin rises, I think is wrong, because we saw the opposite, right? We saw Bitcoin's chugging along, just kind of slowly heading higher, and MSTR ripping. So the opposite has to be true. If MSTR can vastly outperform Bitcoin, it can also vastly underperform Bitcoin. And that's something you need to understand.
Great stuff, Joe. Any last thoughts, and where can people find you at?
You can find me on X. I'm at Joe Carlasare. If you have a litigated matter, we didn't get into a whole lot of this, but I'm very busy with litigated matters, as I was telling you before I jumped on here. Litigated matter in the crypto space, Bitcoin space, or in just a commercial dispute. You can also reach out to me and chat about it. If I can't solve your problem, I know someone who can, and I can refer you to a whole host of different legal professionals or tax professionals that can assist you. But really, X is probably the easiest way if you just want to talk Bitcoin or markets. My firm website, which you Google my name, you'll find my firm contact info. Yeah. You can reach out and we can talk about anything legal. And one thing I will say is that there is a absolute epidemic out there of people getting scammed in this space. I get 10 calls a day usually from people wanting support, wanting advice. They got scammed by this. Please be very careful whenever you're sending Bitcoin to anyone. If you're doing it, even somebody you think you know, I mean, there's deep fakes now and there's, social engineering. Be very careful about ever authorizing any Bitcoin transaction because it is very difficult to get back. And if you have been a victim of this stuff, either consult with a lawyer or consult with law enforcement because it is absolutely rampant.
Joe, you are a wealth of knowledge and a good friend. We'll link to all that below as well. Thank you, sir, for coming on today.
Thanks for having me.
If you like this episode about Bitcoin, macro, geopolitics and where things are going in the world, then you're going to love the one we just recorded here last week. And you're going to love the one we just recorded here the week prior with other macro experts and Bitcoin experts. They're going to blow your mind. Go check those out. Come on. I'll see you in there.